Hey, Money Multipliers. I wanted to take a few minutes to talk about something that's really important when it comes to your policy, and that's what to do if you find that making your premium deposits becomes a bit challenging. Now, life happens, and sometimes things get tight financially, but the good news is that you've got options to keep the policy active and avoid surrendering it. So let's go through some of those options together. The first option is you can switch to a lower premium mode. So, for example, if you're currently paying your premiums annually or semi annually, you can move to a monthly premium deposit mode, and that can just make things a bit easier for you. This way, you're spreading out the cost over 12 months rather than one big lump sum. Now, also keep in mind, regardless of what your premium mode is, a large portion of each premium deposit is contributions to the paid up additions rider or PUA. And that's the flexible portion of your premium deposit. So you can reduce that contribution to the minimum required amount, which is typically $10 to $15. So just ask your insurance company, give them a call, find out the exact specifics of what that minimum required amount is on the PUA rider. Now, when you reduce the PUA rider, that will slow your cash value growth, but it's going to keep the policy in force while lowering the overall premiums while you weather this financial storm. So it's a good way to keep the policy going without stretching your budget too thin. Now, another option is to utilize policy loans if you have the available amounts within the policy. So, if you haven't fully utilized all of your policy loans up to this point, you could take a policy loan and use that to cover your premium deposits. And this is a great way just to keep the policy in force without having to dip into savings or pull from a credit line or use any other funds. Remember that while you don't have to pay the policy loan back right away, interest is still going to accrue on that balance, so it's something to keep in mind, but this can be a helpful short-term solution. Now, one more thing that I want to cover is what's called catch-up paid-up additions or catch-up PUAs. Once you find that your financial situation has improved, you have the flexibility to make up for any missed paid up additions contributions, which can help you continue building up your policy's cash value once you're back on solid ground. So it's all about flexibility. The key here is that you don't have to feel locked into one way of doing things. So with that, in summary, you can switch your premium mode. You could reduce your paid up additions contributions. You could take a policy loan, or you could do a combination of those three. But ultimately, you want to keep the policy in force, keep it working for you, even if that means that you have to adjust things temporarily. And the best thing about it is once you weather this financial storm and that storm passes, you can always get back to fully funding your policy. If you have any questions or you want to dive deeper into any of these options, don't hesitate to reach out. I'm here to help you navigate your journey with the infinite banking concept, and I want you to feel confident and empowered every step of the way. So thanks for watching, and I'll talk to you soon.